Still have questions about ETF, REITs, or investing in and for retirement? Well, today I have answers. I'm going to tackle the most frequently asked questions about retirement investing that have come in this past week from our audience. I want to get clear and clear up the confusion. So, welcome and thanks again for joining us for another episode of Living Each Day on Purpose as we continue our series, How Retirees Can Confidently Invest for Retirement Safely and with Minimal Risk. And so, we're going to follow up from where we left off the last time. And I want to appreciate those of you who sent me your questions via email. Thank you so much. Gave me time to research those so that I can give you some good, thorough answers in this broadcast. So, many of you may still have some questions, and you've been asking some great questions of me lately about investing because I'm teaching a unique strategy, and that is known as dividend income. And so it differs from a lot of the other investment strategies that may be out there because I'm specifically talking to either those who are preparing for retirement or those who are already retired and looking to supplement their income or gain additional income in their later years of life. So we've covered some of the information on how to get started, how to set up an account. We've looked at a couple of ETFs and REITs, gave you a few recommendations on those, as well as gave you some information on how to begin your stock portfolio mix, how you may want to set that up. But we're going to cover some deep questions today. And if you still have more questions after this broadcast, I want you to drop them in the comments and I'll answer them in future videos. Or you can always send me an email or text me or contact me on my social media page. So let's go ahead and get on into it. First question that is most common and coming to me quite often is how much money do I need to start investing? And that varies from everybody, but my strategy teaches you with as little as $50 a month, $100 a month, you can get started investing in ETFs and REITs because you can start even lower than that with $25. When I first began, I started with $25 because that's all I could do at the time. I wasn't sure if I wanted to do much more than that because it was new to me. So I bought my first ETF with $25. I think the actual ETF that I bought was around 22 and some change. So I only bought one share. But as I became more confident, then I start buying 4 or 5 shares at a time. Sometimes I buy even 10 and 12 shares at a time. It all depends upon how quickly you want to get started and how quickly you want your money to grow. But you can start as little as, I put it this way, whatever one stock would cost you in an ETF or REIT, that's where you can get started from. But you can also get started with less than that because I said ETFs and REITs allow you to buy fractional shares, which means if you can't afford to buy a whole share, you can buy a portion of a share, okay? Which means that you will still own the stock, you just own a portion of it. So of course your dividend won't be that much at the time, but we're not talking about that yet. We're talking about getting started, okay? So you can start with as little or as much as you are comfortable with, okay? Second question, what's the safest investment for retirees? And this may vary from person to person that you talk to about this. However, a mix of bonds, dividend ETFs, and REITs I find to work best. I'm not a big bond guy because you have to also understand bonds. Sometimes you have to hold them for a certain amount of time, and you may not be willing to do that, especially if you're already in your retirement years. You don't want to wait for the bond to mature 10, 15, 20 years. So this is why I recommend ETFs and REITs so that you can start gaining dividends right away. Okay, and you can also as you talk about bonds, there may be some early withdrawal penalties and such, so you want to be careful about that. But ETFs and REITs, if you're already 59 and a half, you can start withdrawing those funds back immediately. So if you want to know the minimum time that you have to invest in a bond, you want to know that before going in. ETFs and REITs, on the other hand, don't require minimum time to hold them. You can change, you can buy them at any time, you can sell them at any time. But here we're talking about buying whole, that's the strategy, and we're talking about gaining dividend income on those ETFs and REITs that we own, okay? So, question, another big one, a real big one is, what if I need my money in an emergency? as we get older, sometimes we need to free up some money. We may want to do something. Um, Can't imagine what that may be at this age if you haven't already done it. But let's just say you want to buy another house, and you may want to pull from your, portfolio in order to do that. You can do that. Okay, ETFs and REITs are very liquid. You can sell them at any time. There's no minimum hold time on them. Okay, and depending upon the type or account that you have and your age, you may be able to start withdrawing your profits earlier. As I said before, if you're already 59 and a half, you can start withdrawing money from your retirement portfolio without any penalties because you've already waited the age limit. So it doesn't even matter if you're 60 and you started yesterday and you put a certain amount of money into it and you already start getting dividends. Guess what? You can withdraw that money right away without any penalties, okay? Pay interest on your earnings, and that's about it. All right? Here's another one. Now, this one is one that I get quite often, and I kind of chuckle at it because I had the same thought when I began years ago as well. Should I invest all at once or over time? Again, depending upon your age right now and how quickly you want to get to your next milestone will determine how much money you begin with. But if you don't have just a pocket or pool of money just sitting to the side where you're willing to chunk down thousands of dollars into it right away, then you start off slowly. You may start off monthly, you may start off weekly. It depends upon you. But dollar cost averaging is what allows you in the long run to gain, meaning that you invest your money at a certain amount of time over a certain amount of months. This is how your dividends begin to grow and collect and you begin to earn. And unless you have, as I said, large pools of sum of money just sitting there and you're not chunking 10, 15, 20, 30, $100,000 directly into it at one time, then you are dripping your money in over time. And as a result, this amount begins to grow over time as you make investments in ETFs and REITs. You begin to get those monthly or you begin to get those quarterly returns. One portfolio I have is strictly set up for monthly dividends. Another portfolio that I have is strictly set up for quarterly dividends. Me, I like seeing money hit my account every month. This is why I like monthly. This is why I do quarterly. And I stagger them out so that I am still getting paid every month on these investments. But it works over time. And so even if you are or you find yourself in your 50s or in your 60s and you're planning to live the next 10, 15, 20 years, you still have time to use dollar cost averaging. You still have time for your money to compound and grow over time. And it's safer this way. It's safer this way because you're not putting all of your money at risk at once. You're not putting all of your money into the market at once. You are making regular and frequent deposits over time, and you're gaining dividends on those as well. So essentially, you're buying more shares when the market is down. And even when the market is up, you maybe not buy as many shares, but you are still getting the dividend return on those stocks that you have purchased. Okay. And finally, can I lose money with ETFs and REITs? Another common question. Well, the answer simply is yes. And I would be a liar if I would say no. You can lose money and any investment. The market moves up and down as it's designed to, but over time, your investments grow. A lot of people are panicking now because the Dow may be down and may have lost a few hundred points. However, it always comes back up. And instead of panicking when the market is down, that is a good time to buy. I don't panic when the market is down because I'm able to buy more shares at a lesser rate than I would if the market is up. When the market is up, meaning stocks are going to be higher, I'm able to buy less shares. So when it is down, it is a good time to buy. So it's not a time to panic, it is a time to buy because over time your investment grows. And markets are always subject to volatility, and that is the movement up and down. But smart investors build wealth over the long term because they're not just getting in and getting out. They're building wealth over the long term. And since we're building wealth over the long term, we're primarily focusing on ETFs and REITs. that are paying us dividend income, which are safer and they're more assured returns. Because as I've already told you, companies have already agreed to pay a certain amount for every share that you own. I have one that is coming up this month. It's already up compared to what they had expected it to be. I think it was only going to be 50 cents a share, but now they're proposing, or they said that they're going to be able to pay 52 cents a share, which is really great. So for example, every dollar that I invested, I'm getting 50 cents on that dollar. You can't get that from any bank. You can't get that from any high yield savings account. You can't get that from any regular banking, saving, or checking account. You can only get those kind of returns and gains in the market. However, I'm wanting you to be safe. I'm wanting you to be educated. So I'm recommending ETFs and REITs so that you can get the portfolio income on those. Okay? So some of you have already signed up for my class, so thank you. I really appreciate that. So the information that I'm sharing is being of help, and if it is and it's being help to you, please let me know in the comments if these videos are helpful for you. If you want to see more of them, let me know. I'd love to come out here and address more of these topics because I am working with people behind the scenes on their portfolio, and we're seeing some amazing returns. I'm seeing amazing returns, and as I said before, if you come on board with us, you sign up for any of our educational programs, you get to see our portfolio behind the scenes. I show you the dividends that I got coming in every month, and every month I have dividends hitting my account. Some are $100, some are $200, some are $300. It just varies depending upon how many shares I own in these companies. And so you can see the same thing, and it's never too late to get started. But as I said before, for every day that you wait, that's one less dollar invested, that's one less dollar earned. If you start today, you start earning today. Okay? But if you still have questions, drop them in the comments. Let me know and I'll answer them in future videos. And if you want some one-on-one help, if you want to be able to master retirement in your later years using the dividend income strategies that I teach, sign up for my Unlucky or Freedom VIP workshop. And I explain all of this to you in great details for 3 days. And then after those 3 days, I'll work with you every week. I'll work with you every month behind the scenes as we continue to grow our portfolios and grow our income. And this is going to be a great time. It is a great time as we see movements in the market, as we see changes taking place in the market and in the landscape. Don't panic. Let's be wise in what we're doing and let's get started. Let's grow our money while we can and while we still have it. All right. Listen, I hope this has been helpful for you today. Like and subscribe for more retirement investment tips. And I look forward to seeing you on the inside of one of my classes very soon. And as I said, if you've got any questions or haven't answered something that you may still be pondering about or thinking about, drop it to me in the comments and I'll make sure to address it in my upcoming videos. I'll be back again next week, same time for another strategy for you. I know that depending upon where you are in the region of the world, time change has changed a little bit. We have not changed and we won't change. We're on set time here in Panama. So I'm coming on at 5:15 my time, which is 6:15 Eastern Standard Time. And of course, if you're Pacific time, it's 3 hours behind that. So, rest accordingly, set your notifications so that you know when I am on. All right. And listen, I hope this has been helpful to you. I look forward to seeing you in the next video. Until then, take care. God bless and happy and safe investing and retirement. And I look forward to seeing you on the other side. Take care and bye for now.